Hey everybody, it's Blair Nightingale here live with Market Monday. We've been doing this show now for, I want to say almost 2 years. Almost 2 years we've been doing Market Monday starting early on in 2020. Market Monday, a free resource for you guys to come on here, Facebook, YouTube friends, learn something about the market, both learn and apply. Learn and apply. The whole Tradeway program is learning the system. We approach the stock market. We don't guess, gamble, or go for it. We approach the stock market with a system. And so I want you folks at home to know that that's what we do. We help make sense of the stock market. Maybe it's never made sense to you before. Maybe you've been in the program for a bit and you're starting to see that this is actually something that is not just for other people, it's for you too. And today we're going to do just that. Learn, but we're going to apply. We're going to do some paper trading today. Today is all about paper trading. All about paper trading. I'm going to show you, for those of you who don't even know what paper trading is, it's an amazing way for you to practice trading with no risk. No risk. Okay, a lot of people don't even know that you can do this. There's a few ways to do it. We're going to talk about what it is, how it can benefit you, how easy it is to start doing, and I'm going to show you a couple of different ways that you can do that. That is what we got lined up for today on Market Monday. So Troy is dropping some words in the comment box already. Hey everyone, Southwest Houston. I'm thinking it's probably pretty toasty out there in Houston still, huh, Troy? It certainly is here in East Texas, Dallas area. I guess I'm not as far east as you are, but it's become kind of a thing on Market Monday for those of you watching. People like to come on and just say hi, drop their weather in there. The thing I want to point out is we got students from all over the country. Okay, Tradeway has over 10,000 students in our student body. Okay, learning how to do this, I've told you guys many times now, this year, last year, especially last year, was really the turning point. Listen, people all over the country are learning to trade stocks. I saw multiple posts on social media today. Tesla. Did you see Tesla? Not just from stock traders, right? In some cases, kids who are just buying shares of stock, right? Unafraid to do it, getting their feet wet. That's what I want to show you today. Now, we've got people on here of all kinds of experiences, not to say that people out here are afraid to do it, but I know some of you are. Because I've met you. And I was nervous when I started. So that is an okay thing with me. Wherever you are, you're going to get something out of today. So as Troy put his name in the comment box there, if you guys have any questions, anything that you want to ask, go over, redo. Maybe it doesn't even have anything particularly to do with paper trading today, but you just got a question about stocks, maybe a stock ticker. I would be happy to jump on that, spend some time in our episode today looking at that. And of course, you guys can always just drop a name and say hi to me. Okay, that said, let's move on. Today's show, I mentioned paper trading, one part of it, practicing without real risk. So really just simply, what is paper trading? Well, paper trading is a way that you and I can simulate trading in the stock market. It's going to behave the same way. It's going to succeed or fail the same way, except we're not actually going to put any real money in. So we are able to test where we are at personally, stock trading, without losing any money. Troy's dropping in the comments here, I prefer TD Ameritrade, right? There are some different platforms where you can do what I'm describing. We're going to get to that in a little bit. But paper trading is useful for you and I if you are inexperienced. Okay, you've never done any trading before, or you've done very, very little trading. Paper trading is a great fit for you, okay? Because you can build some confidence, some familiarity, some knowledge by paper trading and not risking any real money. You literally have nothing to worry about because there's no real risk on the table. That said, those of us who've been trading longer, where does paper trading come into play? If you are learning a new strategy, okay? At Tradeway, we have many different strategies, okay, for different reasons. I'll give you two of them right now. One, the market seasons change. We've talked about this recently on Market Monday. The market seasons change. When the season changes, if we as traders try to force the same approach to the market when the season changes, we will struggle to be consistent. We will struggle to be successful because the market doesn't always want to go up. It doesn't always give itself to what we call directional trading. So what if we could learn some other ways of trading? Non-directional, meaning I don't need the stock to move up for me to profit on that position. We teach how to do that. Markets can go soft. We've also talked about this. They can go up, they can go down, they can go sideways. So we can learn different strategies. When we learn a new strategy, we can paper trade it, right? Same thing. We're learning, we're trying something new, so we can paper trade, all right? Maybe we want to look at a new strategy. We can go back in time. Okay, we can go back in time and see how that strategy would have performed. It's actually something we call back testing. And in some ways, it's a way to paper trade, okay? So market seasons change and we learn new tools. So no matter where you're at in your trading journey, paper trading can be a very useful tool. I want to pop a comment up here. Barb is jumping in here and saying, scared to jump in? Yeah, especially now when it sure seems like the S&P is riding too high. I'm not sure I'm comfortable right now to jump into any up trades, meaning we stand to profit in the trade when it moves up. That's an up trade. Should be paper trading. Love that. I'm going to leave that on the screen for a second, Barb, and just comment on that. A couple of things, okay? When we are scared to jump in, and we don't want to be inactive, right? We would like to at least be practicing something, right? Redeeming that time. Paper trading is a great way to go. It's a great way to practice, especially if you are learning some of those new strategies in a time where you're not so sure about, as Barb says, up trades. Up trades. That's number one. Number two, I would also say, remember that we teach how to stop out the trade, right? We're going to help you define the risk in a trade. It's not unlimited risk, right? We are only going to risk ultimately the amount of money that we put in the trade if we are buying stocks, okay? But we're also going to show you how to not risk all the money you put in the trade. We've talked about this. This is really where stop outs come in. So once I feel confident using stop outs, even when I'm less sure about where the market is going to go. Now, we never know exactly what it's going to do. But as Barb points out, I feel like it's riding too high. I feel like it's what we call extended, okay? Maybe over the short term, maybe you might even say it is medium or long-term extended. There are a lot of warning signs going off in our economy right now. The market seems to be ignoring that completely. The market does what it wants to do. We follow it. We don't expect it to follow what we think it should do, right? But I agree, Barb. I think there's some reasons to be cautious. So we could also get into a play if we saw a stock that we really wanted to trade. Remember, we're talking about trading and not investing, not long-term investing, talking about trading stocks. And you could still use a stop out. You could put less money in the trade. And you could stop out the play if it breaks support. If it's not working, if indeed you get in and the market does pull back, you could stop out the trade. Okay, you could stop out the trade. So that said, very good options, right? Taking a little risk or saying, you know what, right now, I'm going to sit on the sidelines. I don't want to take any risk right now. Okay, I've decided, even if it keeps going up, see, we have to be okay with that. Even if the market continues to rise, I have decided for a specific reason, I don't want to get in the market right now, okay? So I like that. So paper trading can definitely be a tool in your trading arsenal. And let me say this, okay? This is going to help, I like to say, confidence and competence. If we're all confident, but we're not competent, that's not going to do us much good in anything, right? But if we're not confident, it's challenging, it's tough to get competent or even put our abilities to work, right? Paper trading gives us a really safe space to grow both of those. Because once I am able to trade without really worrying about it, the ability of paper trade to get confidence and prove to myself that I know how to push the button. I know how to line this up. I get to watch the trade play out. I get to make decisions on what I would normally do. We're going to do that together today on this broadcast. But knowing how to do it yourself, of course, afterwards, this is something that's going to help you with. And I would just say this, if you haven't really traded, okay, or you're thinking about learning that new strategy, it would be helpful to learn that strategy, but you're not doing it yet. Paper trading begs the question, in my opinion, okay, why not learn? Why not learn to trade stocks? A tremendous financial opportunity. Why not learn to trade stocks if you know you can do it with no risk on the table? Okay, no risk on the table. You don't have to go and put any money in the market to begin to learn and practice the skill set, right? We don't want to let fear hold us back from this, whether it's a general fear of trading or investing, or perhaps, like Barb shared with us, a specific thing regarding the market right now. I'm not suggesting that all of us need to be active in the market at all times. We don't believe that, right? We believe that one of the powers of the retail investor, which is you and me, is that we can stay out anytime we want. We can wait for the best opportunities. Patience is such a huge part of trading, can't be overstated. Patience, such a huge part of trading. But fear is often the other side of that coin, where people don't learn to trade because they're concerned that they're not going to be good at it, they're not going to make money, they're going to lose their investment, any number of things beyond that, right? Sometimes people are trying to prove to others and different things that get into our minds and our hearts when we think about trading. So we just don't do it. We just don't do it. And we potentially miss out on one of the greatest financial opportunities we have in America. This is a fact. This was actually said by William O'Neill, who's a legendary stock trader on the New York Stock Exchange. This is the greatest financial opportunity. We can only trade. This is not really where I was thinking of going today, but I think somebody out there needs to hear this. We can only trade so much time. Our friend Myron Golden likes to say the reason you and I have a JOB is because our money is unemployed. Meaning, what are the ways in our economy that you and I can put our money to work? And could trading my time for money ever keep up with the leverage that is potentially possible in investing? Real estate. I mean, there are other kinds of investing, right? Businesses or stock market. The beauty of the stock market is Wall Street has set the whole thing up for us. The only thing that's missing is two things: skill set and a yes. Skill set and a yes, right? We can teach you the skill set, but the yes has got to be there. Paper trading helps us with the yes. It does, because it says we can do it without risk. So I would just say that, and I've hammered on this a bit. We're going to move on, but why not try it if you know you could do this? And again, that might be just that new strategy, right? We've got some students on here. You know what I mean when I say credit spread. Some of you maybe have been avoiding that credit spread. Okay, it's a phenomenal strategy. It can really, really help any trader in their move towards consistency, consistent trading profits, right? That's the potential. So why not try it with paper trading? Okay, so that said, there are two ways to paper trade. Two ways to paper trade. I mentioned both of them, but let me say a little bit more about it. One is virtual. Okay, now Troy, I'm going to put this up. Troy mentioned this to us earlier. He said, I prefer TDA, meaning TD Ameritrade. That's a specific brokerage platform that you and I can use. You can sign up for their account for free and use their charting software for free. And in their charting software, they have paper trading. It's virtual trading. So it looks just like your real brokerage account where you would trade your real money. You'd buy and sell the shares of the stock, except you switch over to a virtual account. And they give you, I think you can correct me if I'm wrong here, Troy, I think they give you about $100,000, right? $100,000 in paper money, and you can go and begin to buy and sell stocks in real time, just as though it were real, okay? But it's not, right? So you'll see how you did, profit, loss, and you can watch those stocks play out in real time. If we got into a play earlier today, Troy says, yeah, about $100,000. If you got into a stock trade today, then tomorrow, same as always, we're just going to see, well, how's it going? Where's it going from there, right? You begin to apply the system that we teach you at Tradeway, okay? So that is virtual trading. There's another side of paper trading, which I'm going to show you today, and that is the technical term for it might be back testing. But what I'm going to do is I'm going to show you my charting software, and all we're going to do is go back in time. And then we're going to edge forward day by day by day. That's all we're going to do. So some of you have seen this. A lot of you have not seen this before. And this is going to be a game changer for you guys because you know you can just go back in time and just go, okay, am I getting this, right? And I can practice. And the cool thing about this way of doing it is that unlike the virtual trading, which has this really, it is almost as close to real as you can get, right? Because you actually have to wait day to day to day to see what the stock is doing. What I'm going to show you today, because we're just going back in time, you can actually just skip ahead. We're going to go through a pattern today. We'll see how many days we get through, but we, of course, don't have to wait. We can do it all right here in front of us because I'm just going to move forward a day at a time, and we can make our decisions as it goes along, okay? You'll see exactly what I mean when I pull that up. Let me pause for a second. Some great comments here coming into the comment box, so I want to make sure to get to that. Barb says, earnings season is scary. Now, we talked about this recently, right? Earnings season. This is the news item on the table right now. This is the news item. Publicly traded companies have to report earnings. What did they make? How much did they make? They're going to give us a financial breakdown of how they did over a quarter, and they're required to do this. We call that earnings, and they set a specific earnings date, okay? Right now, we are in the thick of earnings season. I think a third of the Dow Jones Industrial stocks will report this week. A bunch of big tech stocks, I was going to say tech companies, are reporting this week. So this is definitely the big news item. How well are these companies doing? Okay. So Barb says, earnings season is scary. Yep, I'll sit back for now, but thankfully you all are getting me back into looking at charts, drawing lines, reviewing concepts. Thanks, such good teachers and encouraging. Well, I'm encouraged to hear that, Barb. Thank you for sharing that. Barb is just sharing with us, this is our community. This is our community around Tradeway, helping you know what to do, know when to do it, and ultimately, and I'm glad to hear this, Barb, encouraging each person as an individual trader, because this is a journey for a lot of us, right? It's one worth fighting for. We're all headed the same direction together. And so we definitely have a culture and a community of encouragement. And I'm glad to see that coming across. Some of you guys, if you need that encouragement, please go ahead and reach out to us. Reach out to us right there, Facebook, YouTube, comment section on one of these lives. You can always email us, support@tradeway.com. You just say care of Market Monday. Send that over to me. I'd love to hear from you. Let me know your story. Let me know your questions. And that would be something that I would be honored to do. Okay, paper trading. Next part. Now that we have a little bit of an idea of what it is, and again, we're going to look at it here in a minute. Let me just point out the pros and cons real quick. Now, I've mentioned the first one. Pros, practicing, not risking any money, right? So it's easier to step in. Also, mechanics. Do I have the mechanics right? if I've never bought a stock before, if I've never bought an option before, okay, if I've never done a specific strategy before, doing the paper trading can help me know. I also want to go through the process. Some strategies, when we teach people, I want you to fail. I want it to go against you. I want it to go ballistic on you, right? If you get into a specific play and it goes completely wrong and you go, oh my goodness, what do I do? Well, you're paper trading. So you can learn what to do. And if you're in one of our programs, that's a great spot for you to connect with myself or one of the other coaches so we can walk you through exactly what you need to do when that happens. Trading, we have to plan for what we don't want to happen. Now, we plan for what we do want to happen, but a successful trader has to know how to manage both when it does what he wants, or she, and when it does what we don't want, okay? So that is the main pro of paper trading. I have to say, though, there is one thing that is a con, pros and cons, okay? This is, for me, the biggest negative, if you will, of paper trading. We have to remember what it is good for. And what it is good for is practicing the mechanics. If you're a note taker, that's one to take down. What it's good for is practicing the mechanics. But what it does not do for us, is help us see our emotions and how our emotions are going to affect the trades. Why wouldn't emotions come into play so much during paper trading? Because there's not real money at risk, right? That's why. There's not actually real money at risk. And because there's not real money at risk, we don't have those emotions springing up. The emotions are the biggest learning curve in trading, okay? And we have ways to safely do that once we move on from paper trading. But when you're paper trading, it doesn't necessarily tell me, well, how much fear does Blair have when he's trading, right? How does Blair manage his emotions when the stock's going up? Does he get out too early? Does he just want to take the profits right away and walk away? When it's time to sell, does he want to stay in because he's thinking, man, this thing's going to go to the moon. This is the easiest money I've ever made in my life. I'm not getting out of this, right? When it's supposed to be stopped out, does he go, I'm going to give it, surely it'll come back. We always like to say we don't want to dance with Shirley, right? That's the last person you want to dance with as a stock trader. Surely it'll come back. Surely it's going to move up. Man, it's gone down so far. It's just got to come back up now. Maybe I'll just add to my position. Maybe I'll just buy more shares, right? We know not to do these things, but the emotions kick in. And paper trading doesn't necessarily help that process because those emotions don't kick in because there's no money at risk, right? There's no money at risk. Not yet. So we move you into what we call phase 2, right? Phase 1 is paper trading. Phase 2 is what we call small money, okay? Small money trading. So that's a different thing that we will take you through in the program. You don't want to skip that step, but we're at paper trading today. So that's the main thing. I have to say, pro and con, that's a big part of it for now. So good for mechanics, not so good for emotions, okay? If you master the emotions, man, you have made a massive move towards being a consistently profitable stock trader. It is possible to do, and we've got to get through that process. Paper trading, man, this is the right place to start, okay? So that's what it is. A couple of different ways to do it. Some of the pros and cons, but we actually need to look at it, don't we? We actually need to look at it. So let's go ahead and jump in. I'm going to pull up a chart here. First, Joe says, is this being recorded? Is this being recorded? And yes, Joe, it is. It is being recorded. So all of our broadcasts here, Market Monday, to our friends on YouTube, to our friends on Facebook, we've recorded them all. In fact, it's just automatically recording right now. So you can always watch this afterwards on both Facebook if you are on our page or on the page on YouTube. So let me go ahead and share my screen here. And I'm going to show you how we do this, okay? So everybody can see the chart up on the screen now. You can tell if you've been following along with the market, especially if you've been following along on Stock Talk Thursday. That's 4:30 p.m. on Thursdays. We come and get together, talk about the markets. Of course, here we are on Market Monday. I also show the chart on both of those And you've seen this pattern that the S&P was in. Now we've broken out of this pattern now. I'm going to show you the most recent data here in just a sec. This is in the past, okay? So I want to show you this. Now, no matter what your charting software is, okay, first of all, it does require that you have some kind of charting software. In our program, we help everybody know what's a great charting software and how do I set it up. So if this is totally new to you or you've got some questions, we help you do that in the program, okay? So that's one thing to consider. Troy also mentioned earlier, TD Ameritrade. I said, TD Ameritrade, they actually have charting software in their platform. You have to sign up for an account. It's free to open an account. You have to fund it, I think, within 90 days. So you have to put something in the account within 90 days or they won't keep it open. But there are other options as well for charting. That said, we got to have something to chart if we're going to do paper trading the way that I'm going to show you tonight, okay? So if we have this chart here, I'm just literally using the arrows on my keyboard. Okay, now I'm zoomed out a bit, so let me come in a bit and make it a little bigger for everybody. And you can see on the hard right edge of the chart, I know this is very basic, but I'm just showing you how it moves. I can just click back and forth. Okay? So what am I doing here? Well, first of all, I'm looking at, I'll get back to your comments here in a sec, Troy. I'm looking at the S&P, right? I'm looking at what we would call the S&P for market tone. Rising tides tend to raise all boats. So what have I seen here so far? Well, I've seen a bounce at the 50-day, a bounce at the 50-day, a bounce at the 50-day, a bounce at the 50-day. So I'm really not at support right now on the S&P. That's not to say that we couldn't trade in here at all. Okay? But there's a bounce on the S&P, right? It's down into support, little high on this one, little high. Didn't quite come down into that level the same way back here. But once you start to see that move there, we could go on that day, we could say, you know what? The S&P is continuing to move within its pattern, okay? It's continuing to move. Now, we're not trading the S&P. We're just looking at this as an overall indicator. We're going to head out to an individual stock. And what I would then do is I would go into my watch list and I'm literally going to cycle through. Now, I know we've got this post, this blue line on there that can be a little bit intrusive. And that post is actually from today. So we're back in time now. We're actually in August of this year. And I could go through here and I could look for patterns, right? Just like I would if this was actually today, right? Now, this is not a pattern we're going to use for stock trading. Because why? Because it's going down. However, just pointing out, for those of you who are options traders out there, okay, we've got a nice looking downtrend starting to change. But that's what I would do. I would go through the list. You know, what do we got there? PBR. Okay, that might be an interesting one. Okay, it's a little bit below support here. But I might come in here. Now, we'll keep moving. I'll show you some other examples, and we'll walk through one together. But I might come in here and go, you know what? I like this rolling stock. I'm not trying to be I'm trying to be fair, right? We've got to move down to this level and up to that level. Down to this level, up to that level. Down to this level. Okay. That's a reasonable expectation to say, okay, it's hit that line 3 times. So I'm not just using any potential knowledge that I have because I'm looking in the past, right? That's why it's nice to start on the S&P and move from there so that you don't have fresh in your mind what has happened in these stocks, okay? Now, on this one, I could go, all right, give me 1 day of follow through because, again, it's a little too low for me. And if we see it, then maybe potentially we have an entry. If we don't see it, well, we're not in the stock, right? So let me click on the screen again. So not really anything there, right? Didn't happen. Okay, so there. Now we're in a position where we might go, that's some follow through on this stock, right? I have not looked at PBR, which is the ticker that we're on right now. I have not looked at this stock before tonight. Now I have another ticker that I'd like to get to that I have looked at beforehand. So I don't even mind telling you that. I've got one that I want us to go through. This one I haven't, right? I haven't gone through this one. So we could start looking at this right where we're at here. Okay? PBR sitting at $10.42 now. Now, that's if we got in at the very end of that day. It gaps up, right? You see this stock, it actually gaps up from the day before. So it'd be reasonable to say if it gapped into the range, we might have got into this stock, but not at the very high of the day. Now, to be fair, it's probably true that we wouldn't have gone in at the absolute lowest price of the day either. So whenever I do this kind of paper trading, there is an approximation here, right? It's not in real time, but it does give me an idea of where I generally could be. So the price at the high of the day is 1040, or at the close of the day is 1042. So I might even just look at this here and go, I'm going to say I got in the stock at, say, $10.30. So that's what we'll say, $10.30. So what do you do from here? You go, all right, I got a note on my phone or on my laptop. I've got a piece of paper, and I'm going to write down PBR. I'm going to write the day, August 23rd. On August 23rd, I bought PBR at $10.30 a share, right? And I bought 100 shares, right? I bought 500 shares. Do something in the ballpark, right? Ballpark of what you might trade, okay? Fear aside, maybe being really new at this aside, pick something that would be ballpark. Some of you guys might have a $150,000 trading account, okay? Some of you guys might have more. Some of you guys might have a $2,000 trading account, a $5,000 trading account, right? Some of you might just say, hey, Blair, you know what? I might only have $500 when I open my account, okay? So get somewhat of an idea of, okay, what could I do here, right? 10 shares here, it's going to cost me $100 approximately, right? It's helpful to come in here and not say, all right, I'm only going to have a $3,000 trading account and I'm going to buy 1,000 shares of this stock, right? I'm going to buy 1,000 shares of this $10 stock because you maybe would never be able to, at this point, afford that. So something in the ballpark, and then write that down. How many shares am I going to be in for? How much of an investment? So everybody out there right now who's watching, you can follow along on this. $10.30. How many shares would you buy? Okay. How many shares would you buy? And then we're going to just walk through this. Again, I haven't specifically looked at this. So this trade is going to be more like a real trade. I don't know where this is going to go. Now, I know there's a pattern, and I know that the market is bouncing at support. Okay. So here we go. Everybody out there got an idea how many shares you might purchase in this. $10.30. No real money on the table. You might as well jump in, right? You might as well follow along with this. Okay. So here we go. Let's go ahead and cycle through this. $10.30. Now, actually, I should stop myself. I'm getting too excited on this. What else do we need to know? Well, we need to know where we're going to sell it, and we need to know where we're going to stop it out, right? We're going to need to know where we're going to stop it out. So I would just say, for sake of time and simplicity, the stop out that I would suggest is actually below this day right here, something around $9.72. So really, we're not even looking at $1, right, on the downside. We're looking at about 70 cents to the downside, and we're looking at about $1 on the top side, because it's this resistance line as it sits right here, which is a little tiny bit low there. I could go like that, is at 11.28. So it's about $1 up, 70 cents on the bottom. Okay. Some of you may choose to stop that out earlier, right? You could say if it breaks support, then I'm out of the trade. So that might be around $10. Okay. $10. For those of you a little more aggressive, you could go down lower. So we need to know where our stop out's going to be. Okay. I'm not going to go into the specific ins and outs of a stop out here for time's sake. We have done that in Market Mondays past. And of course, we go through this extensively in our Step 1 class as well as in our program. Okay. So that said, you've got to have those three numbers in place Know what you want to do before we start moving here, because that's what's going to help you guide your decisions, right? Especially once emotions come into play, which, like I said, not necessarily going to feel that here because we're paper trading. So now that we've got that covered, we're just going to go ahead and see, do we get to our sell point or do we get to our stop out, right? We've done our diligence ahead of time. We need to see the stock play out. So let's go ahead one more day and see what happens. I've got to click on the screen. Okay, we're up to 1080. Okay, $10.80. So nice follow through. Again, I know we've got that kind of annoying thing on there. Blow that up a bit so you can see that. Another gap up in the morning, strong candlestick, closing above the moving averages. Okay, so I would say at this point, who's out of the trade, right? Because I'm going to ask you guys, as we do day by day by day, who wants to sell, who wants to get out? Well, it's pretty obvious here. We're not at our sell point yet. The stock's moving up nicely. It's within the pattern. It's doing what it has done. So no reason to get out of the trade at this point in time, okay? Let's go ahead and move another day forward, okay? Now, sitting on top of the 20 and the 50-day moving average, that's that blue and white line, used it as support. Now, I want you to notice something here. You can see a wick there. Now, it's kind of hard to see, I know, but you can see a wick on that candlestick, which means in the beginning of the day, most likely, it was moving down, okay? How many of us might have been thinking, if this is real money now, I think I should get out. I think I should get out of the trade. I think I should take what I have. I'm happy that I have what I have, right? Now, this is a lower dollar stock too, okay? So remember, these moves aren't going to be as big in percentage-wise, or I should say dollar-wise. But, you know, as we do a lower dollar stock, then we have the potential to have more leverage, buy more shares. So it depends on how you look at that. That said, if it begins to pull back, how strong is that temptation to get out? Something to consider, right? That's part of what we want to help you work through. Let's move another day forward. Okay, now we have a red candlestick. So I want you, if you want to throw it in the comments, Troy, okay. If you want to put it in the comments, I'm out. Just let me know, you're out, okay? If you want to pop in the comments, this is how many, $10.30. How many shares did you buy, right? How many shares did you buy? And you can let me know. If we were in the class together, I'd be asking each one of you as a part of the class. It's a fun thing to do together. Who's still in? Who's out? That's what you want to ask yourself before I hit the button for every day. And you'll do this when you're doing this as well. Before you hit that button, let me know, okay? Let me know what you want to do next. Barb and Troy both commenting. Barb says, I'm out the day before. So if I'm understanding this correctly, not the red candlestick, but this day right here. Now, we got in 10:30 here, moved up that day, okay? And for the sake of it, likely, you know, again, we probably don't get out at the low. We probably don't get out at the high. You never know. But just to be fair and specific, I'm fine just saying, hey, let's just get out at the closing price for that day, okay? Closing price for this day was $10.89. So Barb's out at $10.89, okay? Barb's out at $10.89. Everybody else who's still in is still in. Now, of course, we saw this day already. It's pulling back. Okay, wait a second. Now, do we want to stay in, right? Do we want to stay in when a stock starts to pull back? There's a lot of what ifs that start to play in our minds, or at least can, as that begins to happen. Okay, this is where the pattern comes into play, right? This is where the pattern comes into play. Is the pattern over, right? In the past, look, it's come up and hesitated and moved up to resistance. Okay, here it followed up off support, then it dropped all the way back down, then we had a gap. Now, to be fair, that was earnings, right? So we wouldn't have been trading that day. But there are these hesitations, okay? So not necessarily abnormal. We want to wait and see if the pattern follows through. Now, Troy mentioned we can move our stop up, okay? So as the stock moves up, we can potentially move our stop up higher. Can certainly do that. Again, that's something we go into more in the program. So let's move on to the next day. Everybody who's out is out. Everybody who's in is in for the next day. Let's see what happens here. Oh, okay. Big candlestick. Now notice how that candlestick came after a little bit of a pullback. The pullback doesn't necessarily mean, by the way, I mean, when I say pullback, I mean this red candlestick. That doesn't necessarily mean the pattern is over, right? Doesn't necessarily mean the move is over. But there is some profit taking that can happen along the way, right? People take profits as the stock moves up. That's 1, 2, 3, 4, 5 green positive days in a row. So a little bit of profit taking there. And the next day, it follows through. Now we're only 7 cents away from our target price. I should say 9 cents. We said 11.30. Our line here on my chart is at 11.28. Okay, so this is where you would ask yourself again, am I still in the trade? Am I still in the trade? Okay, and then we would move on to the next day. And we pretty much hit, what's the high? Okay, the high is on that day, 11.26. So we're 4 pennies away from resistance. Okay, so that's something that we have to learn, right? How close is close enough? Again, we talk about that in the program, but pretty darn close. So who's out today, right? Who's saying, all right, no, 4 cents away as this thing's moving down, realistically speaking, we probably don't get out at the high of the day, but we're very close to 11.30, which was our predetermined sell point, right? And now we're pulling back from that line, having come within 4 pennies. So who's out, right? Who's going to sell today? I'll tell you, today is a great day to sell. You say, Blair, it could go up. It could continue going up. It could. And there are some ways that we can teach you to be safe and get out when you need to get out. But also, there's a couple of tools that you can use that you maybe haven't heard of that'll actually keep you in the trade if it keeps going up, but it'll kick you out if it goes down, okay? Fun tools to learn how to use. That's something we could use here. If you're staying in without using one of those tools, then you're probably have a little bit of a temperament that is willing to take more risk, but you also have to understand that when we don't sell at resistance, sometimes, yes, it's going to continue up and break out and we're going to be happy we stayed in. But sometimes, many times, it's going to drop because that's what the pattern has told us that it likes to do, okay? Now, for fun, for those of you who are still in, let's find out where this went, okay? See, now we got another day down, okay? Now we've closed now at 1084, okay? So we've given up some 50 cents almost of that gain that we had, which is pretty significant, right? So let's see where we go from there. It gaps down, it tries to come up, but it's ultimately just doing what the pattern has been doing. So we want to trust the pattern, okay? We want to trust the pattern. Mario says, I'm out at 4 cents away. Yeah, I mean, I gotta be honest with you guys. I've had coaching calls. I mean, certainly I've seen it in my own trading. You know, for me, I recall it happening more with entries. You know, I'm looking for a very specific entry, and the stock is coming down, and it's maybe 4 pennies away from hitting support. And then it takes off and goes up, okay? If it's within that small of a margin, okay, support and resistance, I like to say, are more of an area than an exact price point. In this case, 11.30, but 11.30 as an area, 4 cents away, not too shabby. Mario says, I'm out at 4 cents away because Mario probably knows that's good enough. That's not getting scared out because of fear, okay? That's going, no, I've got 99% of the potential profit I was looking for in this trade, and now I'm out. So how many other people out there said, you know what, I'm out at 4 cents? Or you got out previous. Maybe some of you got out the same day as Barb. Now, if you got out the same day, you still made some money on the trade, but it's good to build the habit of staying in the trade according to the pattern. There's some ways we can protect our profits if we do that. Troy mentioned one of those ways. This is a nice doorway for us into just how simple this can be, but some fun tips and tricks that we can add in there along the way to help you maximize protecting your profits, maximizing those profits, and knowing exactly what you want to do before you get into the trade. Now, I mentioned this isn't the trade that I lined up before we started today, okay? I had a separate ticker altogether, but we came across this one. Looks like a good pattern, went through it. This was a nice move in the S&P. It was a nice move in PBR. It was a nice low dollar stock for us trading stocks. It's a great example of what's possible for you and me in stock trading. And now you know that you can go and do some of this paper trading yourself, okay? Here at Tradeway, this is what we do. This is what we do. We teach you how to do this. We teach you those tips and tricks that I introduced a little bit today. We show you how to move into the small money stage because we don't want to stick. Paper trading is very useful. We don't want to stay in paper trading for too long, okay? We want to move forward into something that's actually going to bless you and your family by growing your account, okay? That's the skill set and the potential that we want to step into with you. That said, you can head over to tradeway.com. If you've never taken our stock trading class, right there on the main page, you can sign up for Stock Trading 101. We call that Step 1, Start Your Journey. It's right there on the main page. Also, I'm putting into the chat, both Facebook and YouTube, this is our long-term investing program. Okay, at Tradeway, our coaches actually have a long-term program, meaning we're not just trading stocks, your long-term money, your savings, your retirement, tuition, whatever it is that's in your long-term financial goals. We've got a program, we've got a setup for you, a profile that's going to fit you and your family, and we help protect your long-term money with these skill sets. We blend long-term investing with the skill sets that we've learned trading. So, like I said in the last few Market Mondays, if you have your money with us, we're not leaving it in the market all the way down. We don't do that. We don't believe that anybody needs to do that, except that we need to have the skill sets to be able to take the best of both worlds. And that's what we feel like we do in the AMPed program. So if you've got some long-term money with an advisor and you don't really know what they're doing, or you would just like to be, you're just curious, you'd like to know more about what it is that we do here at Tradeway that's different, then you can click on that link I just popped in there. This is our AMPed intro. Okay, there's no commitment on your end if you sign up for this webinar. You get to meet Ben Russell, his team, and he's going to show you the Tradeway difference. He's going to show you what we do with long-term money. He's going to show you what we don't do with long-term money. Nobody cares about your money more than you. So if you don't know what your financial advisor is doing with it, if you're potentially not happy with the returns that you're seeing, if you're concerned, like Barb said, I feel like the market is just really extended, and I've never heard from my financial advisor what's his or her plan if the market tanks. We have a very detailed plan to share with you in that exact instance, and we feel like it is our duty to share with you and yours what we can do for you. That's the AMPed intro. Click on that link. Join us for that webinar. We would love to show you that information. Again, no obligation, but we think you're going to like what you see. Everybody, this was a pleasure. I enjoyed being on here. This is paper trading. And I'll just reiterate in closing, last time, if you've never done any trading or you're hesitating learning that new strategy, go ahead and reach out, because we would love to teach it to you. And with paper trading, you can learn how to do it risk-free, okay? Support at tradeway.com. Any questions, care of Market Monday, support at tradeway.com. You can see our memberships right on tradeway.com. We will teach you how to trade options, give you coaching support, everything that you would need to augment and further your trading journey. Don't sit on the sidelines. At least learn how to paper trade with us and get into here. Troy says, later, Blair. Post that up on the screen. Later, everybody. Thanks so much for being on here, and we are back on Thursday. Share this with your friends. Somebody out there might want to hear this as well. Tag them, share, and I would be glad to have you do that. Lisa, You know what? Lisa's asking if our long-term amped program is actually back in the market because they got out of the market before it dropped. Let me go ahead and just go back here. Now I'm going to go back to recent day. So we were in what we call a squirrel market through this. So we were not actually, long-term money wasn't actually in this decline. Okay. Are they back in? And I believe so, Lisa, but honestly, I can't quote. I'm not in the AMP program myself, and I don't know if and when. I know that they lifted the squirrel market, so I would gather that, yes, they are back in the market. But I actually don't know beyond them actually lifting the squirrel market, okay? Squirrel market has been lifted, and we've had a nice rip higher here, so we'll see if we can get back into that old range there, right in here. That's where we're at right now. That's what I'm working with students on. Where are we going at this level here? Barb, thank you for being on as well. Thank you, Lisa, Mario, Troy, as always, Joe. Appreciate you guys. Everybody commenting, asking questions on here. If you need anything else, please let me know. Tradeway.com and support@tradeway.com. Good night, guys.